Robin, what's the biggest misconception self-employed buyers have about getting a mortgage? Can they get a mortgage?
Yeah, they absolutely can, Renee. But one of the first things I always ask people is, how much do you make? And the majority of self-employed people are going to tell me what their company makes or what their business makes monthly. And that is not the same as what a mortgage company will look at.
Okay, so what are they looking at the tax return and?
Yeah, so the standard loans for Fannie Mae, Freddie Mac, anything like that is we're going to look at tax returns. And we're not going to look at your gross number. We're going to look at the net, and then we're going to add certain things back in. It is a very simple formula. I don't have any special tricks that every other lender doesn't have. Fannie Mae and Freddie Mac put those out.
Okay, so Fannie Mae and Freddie Mac set guidelines for mortgages.
Yep.
Okay,
And they have the worksheets all out there.
Okay, so I know for most self-employed buyers, as a real estate agent, we are 1099, and so we're making that net look as low as possible. But you said you're adding things back in.
Absolutely. So we can add in depreciation. We can add in some business expenses. It is very typical, though, for us to write off everything we can, and there is a way if you have negative income on your tax returns that we can still get you approved for a mortgage.
Really? Okay.
Yeah, because the reality is you're not really negative. You're just writing it off.
Yeah. So how do they take longer? Do those mortgages take longer? Or?
Not necessarily. It really depends. So they're called non-QM, which is non-qualified mortgage. And
Okay.
anything other than a standard 30-year mortgage is a non-qualified mortgage.
Okay.
So one of the ways is we do a bank statement loan, where I would say, Renee, I need 12 months of your business bank statements.
Okay.
We then calculate it based on the deposits that went into that account.
Okay. So
And then we average that.
what if somebody doesn't have a separate business account and their personal and business is all mixed together? Can they still take those bank statements?
Certainly, yep. We
Okay.
can certainly look at those. They may be different things that are not allowed, possibly, because not every deposit is going to be an allowable one
Okay.
toward the income. There's also, and I don't know how many self-employed would fall into this category, but if you have $2 million in the bank, first of all, I'm your best friend.
Yeah.
But you don't have any actual usable income.
Yeah.
We can still get you a loan.
Okay.
Asset depletion. We take your assets, and there's a formula where we say we're not going to use your money. However, if we did, and we broke it out over a certain length of time, how long would that money last? And that is the income that we can then use.
Wow. So it sounds like there's a lot that goes into defining what someone's actual income is when
Yes.
they're self-employed. But getting a mortgage is definitely possible.
Yes, definitely. And it's not the same for every business. Some are cash businesses, some are credit, some are 1099s. All of the different things will be looked at differently.
So can a self-employed buyer only have that self-employment for 1 year? Or do they? Because I know W-2 needs a 2-year job history. So what about self-employed?
So self-employed, we do a 2-year average. However, if we're looking at a standard loan program, Freddie Mac, Fannie and Freddie are basically the same. They just have slightly different guidelines. If you have a longer work history, we may only need to look at 1 year of tax returns with Freddie Mac.
Okay.
Fannie occasionally, but normally 2 for them.
Okay. Is Franny and Freddie a real person?
They are not real people. And I'm going to say it, Annie Mac is not a real person either.
Yes.
Annie is our acronym for American Neighborhood Mortgage something.
Okay. I didn't know that.
Yes, Annie is not real, but
Okay.
I am Annie today.
Yeah. Okay. Sometimes you're Annie, but she's not a real person. Do you guys look at profit and loss statements?
Yeah, so
Okay.
we can also do that. We can also do a loan based solely on the business profit and loss statements.
Okay.
If we're doing a standard loan, though, we're probably not going to look at the business profit and loss because we're going to see that on the tax returns.
Okay. How long would it take? Do self-employed buyers, do they take longer to get a pre-approval?
No. Not as well, maybe a day or 2 longer, depending on how much they get me.
Yeah, getting the paperwork to you.
We do
Yeah.
have built-in systems in our loan underwriting systems. One is called Loan Beam, where I can send in the tax returns, and it will analyze it much faster than I can manually analyze that income.
Okay. All
If
right.
we have to go further outside of the box, we work with a bunch of different investors for loans like that, and they like to look at the income themselves for a bank statement loan. So we may have another day or two added in, but generally, if people get me documents fast, I get them approvals fast.
Okay, so yeah, and even getting documents to the lender is very important. And then once you're under contract,
It is.
you want to get your documents in important. So anytime the lender asks you for something, it's always good to make sure you get it in quickly, because then your answers are going to be back quickly. So it sounds like the tax write-offs don't really hurt the mortgage.
They do to somewhat, but not as much as everybody thinks.
Not as much as everybody
There are
thinks.
things that cannot be added back in, but like mileage gets added in, and depreciation and things like that from a business. All of those can be added in, and those are normally our biggest deductions.
So if somebody says they're ready to buy, but maybe not until 6 or 12 months down the road, is there something that they could do ahead of time to make them look a little stronger or get a better interest rate?
Yeah, so one is I would want to look at credit now.
Okay.
And let's see where the credit scores are. Obviously, the higher the score, the better the rate.
Yeah.
A lot of if we wind up going with an outside of the box loan type, they are stricter on the credit. So,
Okay.
getting that 6-month lead time to get you from a 699 to a 720 could make all the difference in the world on if you're qualified for certain programs or not when you're self-employed.
Yeah. And I think people don't realize too, like the interest rate plays a part in the qualification, right? Because
Absolutely.
if somebody has a better interest rate, their payments are lower and it looks
Absolutely.
like they can afford things better.
Absolutely.
Yeah. So having that good credit score, and minimum debt, I
Yes.
guess, right? And so if somebody comes to you and they, maybe their credit's not up to par, they're, a couple months out, are you able to kind of help them a little bit with saying, hey, if you do A, B, and C,
Absolutely.
we can get you to an approval?
Absolutely. A lot of the time I can just at a glance see what's going to improve somebody's
Yeah.
score. But we do have a credit analyzer where I can plug it in and say I want to get to a 720, and it will tell me exactly what to do. Pay Capital One down to $137 it might be, or actually open a new account.
Yeah.
Some people think that cash is king, which it is not so much when you're trying to build a credit history, because you have
Yeah.
to owe money to borrow money.
Yeah, it's all about the credit
It
score.
is.
Yeah.
And your history. It shows your responsibility financially.
Right, if you're making the payments on time
Exactly.
and things like that. Good. Okay, so is there does self-employed buyers have to have a minimum income to qualify?
Not necessarily. It
Okay.
depends. If a lot of self-employed people have very little debt. So the debt to income comes into play as much as just the income.
Yeah.
If you make $100,000 but have a $1,500 car payment, you're going to get a whole lot less approval than if you make $70,000 and have a $500 car payment.
Yeah.
So that debt is a big deal. And I have, had people many, many times pay things off as we're building toward getting things ready, so that they can be more comfortable and get the payment to fit the house that they want.
Yeah. So you are a local lender. How long have you been a local lender in Delaware?
So here is my challenge to the world. So I started as a paralegal.
Okay.
My challenge
For real estate.
For real estate,
Yeah,
yes.
okay.
And then I went to this side. So my challenge to you and to everybody out there, and anybody who makes this happen for me, I am going to credit the cost of your appraisal at settlement. May 6th will be, 40 years.
40 years.
40 years in this industry. Anybody who buys a house on May 6th using me, I will reimburse you the cost of your appraisal.
Okay.
So 40, that's a long time.
So appraisals are pretty expensive anymore. So this is a big
It
thing.
is.
But so you mean close on that day or go under contract on that day?
Any of the above. I would love to close on that day.
Something
I wanna
great
celebrate,
happening.
Yes, something great happening on that day.
But on May 6th,
May 6th.
the
That's
big
the
40.
day.
Are you having a party?
No.
Okay.
Nah.
Maybe we should have a party.
No.
Big networking party.
That could be fun.
Yeah. Okay. So self-employed buyers definitely can get a mortgage. I know that when you do pre-approvals, you definitely verify a lot of things. So first, before saying, hey, this person is approved, you look at the bank statements maybe, but also for people that are W-2 employees, you're going to look at the payroll statements.
Yes. I will not put my stamp of approval on somebody going out shopping for a home until I have reviewed every single document. People get frustrated sometimes and say, I worked with Johnny or Susie before and they didn't ask me for anything.
Yeah.
And that's not a position I will put myself, my buyer, my realtors, anybody in. It's, there's too many things that can go wrong that way.
I think and it's important. Like, you don't want a buyer to be like, oh, they love this house, and then they put an offer in, and then come to find out
they don't
They
qualify.
can't
Exactly.
buy it. Yeah, that is the worst.
It's heartbreaking.
Thing. Yeah. So okay, good. Well, do the self-employed buyers, do they have to have cash in the bank? Like, is there a different? I know, that might depend, but do they?
It really is going to depend on what type of loan program we go with.
Okay.
Self-employed buyers can buy a home with USDA, which is no down payment, or they can buy a home with FHA, which is 3.5%.
That's what I was going to ask. Is it a different loan altogether, or is it still FHA, USDA?
It really depends on their situation.
Okay.
A self-employed buyer is allowed to get any type of loan as long as they qualify.
Okay.
A lot of the self-employed buyers, though, their income is harder to work with. They have a little bit more hair on their situation, possibly.
Yeah.
And a lot of times they're making more money to where they're going to be priced out of some of those programs that have income limits.
Okay. Yeah. Income limits are a thing too for FHA and USDA,
Yep.
right? Yeah. Yeah.
Well, not for FHA, for USDA, and then for the Delaware State Housing Authority.
Okay.
If
they're
we
going to
need
have
closing assistance, right?
Yeah. Okay. Yeah. I knew USDA, but so lots of ins and outs on getting a mortgage and getting a loan.
There's
a lot to it, but it's always worth a phone call, right? It's always worth a call to have a discussion with you to see what somebody might be qualified to do or what their plans are.
Absolutely.
And it's always best to do it ahead of time,
Absolutely.
not after you've been looking online and see the house you love. And then sometimes it may be too late.
Yes.
Somebody else might buy it.
Renee, one thing that I caution all the time about, and I saw it again this week, when you're out looking at homes, guys, and you're just kind of shopping around and you hit the button on the internet, please don't, because you're going to be sent to 20 different real estate agents, some good, some bad, some indifferent, and they're all going to have their own lender, or that online presence is going to have you go to their own lender. And I spoke with somebody yesterday who had 11 different mortgage companies pull her credit since November.
Oh, wow.
So, and she was not fully aware of everything that, was happening there. So you find your person, that's going to be Renee and that's going to be Robin. We are your people. And you stick with that person. You find the person that you're most comfortable with. Shopping around is not necessarily the best for finding the right professional.
Yeah. Did that hurt the credit score?
Absolutely.
Yeah.
Yeah, it really tanked it.
Yeah, I think we encourage some shopping around, right?
Yes,
but
absolutely.
not 11 times.
Right.
And especially if somebody doesn't have a really high score and maybe they're teetering with a score that's barely making it, that can really break it.
Absolutely.
Yeah. Okay. Well, this has been a lot of great information. How can people reach you?
So I can always be reached on my cell phone, 302-670-2010. My email is rvmiller@anniemac.com. That's ANNIE-MAC.com. Or on Facebook at my business page, which is Miller Mortgage Group.
Yeah, and I know that you post a lot of information. You've been doing a lot of videos on Facebook as well with some great tips and info for people. So that's good. And you text.
I do. Oh my gosh, yes.
Yeah. So, and
another to say that.
Another thing that's important for me as an agent is connecting with a local lender that if I have a question on a Saturday afternoon or a Saturday night or Sunday, you're going to respond. We respect time in a sense that if you are busy, you can say that, but you still respond. And if we're in a deal, I think a lot of us are always on top of that, no matter what time or day it is. But just general questions, someone can always text you and get in touch with you.
Yes, absolutely.
Yeah, so that's good. All right, and you can do the whole state of Delaware, right?
I do Delaware. I'm also licensed in Maryland and Pennsylvania.
Oh, okay. So even if somebody wants to buy in those states,
yes, ma'am,
or selling and relocating, they can do that.
Absolutely.
Yeah. All right. Well, great. Well, there's plenty more to always talk about, but we wanted to focus this video on self-employed buyers to
Are
give
you seeing a lot of self-employed buyers coming out to buy houses lately?
I haven't. I don't know why that is, but that's why I want to do this video to get it out there
Yeah.
that they definitely can get approved. A few here and there. How about you? Do you do many loans for them or?
It's kicking up.
Yeah.
It is kicking up. I'm seeing a shift a little bit. Instead of the super easy loans, I'm seeing
Yeah.
more of the people that think they can't do anything because they have a
Yeah.
challenging situation.
Yeah.
And that is my favorite thing to do. If somebody says nobody can do that, Robin will get it done.
Yeah. Yeah. We've done a lot of deals together
have.
and we've been through some challenging times.
We have, and we always make it work for the borrowers
Yeah.
and the buyers or the sellers because that's who matters.
Yeah, for sure. And we've done open houses and things like that
Yes.
too. So, all right. Well, I'll put everybody's, I'm Renee Edge, associate broker with Keller Williams Realty, and I'll put all of our information, contact info in the description. But thanks for watching.
Thank you so
Yeah.
much. Have a great day, everybody.
Yeah.